morning, everybody. It's Friday, December 22nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. If you've got any questions or comments, as always, please drop those in the chat area, and we'll get to those during the show. You can also reach us at info@agyield.com with any questions or comments. Real quick here, overnight markets had March corn up 3/4 at 473 1/4. January soybeans were up 4 1/4 at 1301 1/2. And March Chicago wheat was up 2 at 614 1/2. Had some good inflation data out this morning. PCE, which is one of the Fed's favorite inflation gauges, rose 3.2%, which was better than expected, and actually has gotten the outside markets to bounce a little bit off the lows there for this morning. Not much in the way of fresh news, guys. We got good rains in Brazil. Mexico is a disaster down south. That we can leave that for a whole nother argument. But I think, kind of right on the forefront for us is option expiration. Ben, what are you looking at in terms of strikes that we may migrate towards here today?
$13 strike has a very large open position. I think it's approaching 9,000 contracts. A lot of that is in puts. We tend to gravitate towards these heavily traded strikes. I think it's important to note that if you start to move away from that, every time you hit a round or a strike number, it's an immediate, as you get close to expiration, those options become 100 delta. So that means that it becomes a real future, whether you're long or short it. And it can create some volatility on a big moving day. I do kind of think that we just hang to 13 today. To note, a lot of that option open interest is in puts. So I'm really excited to see next week how beans perform after the options go off, after we've seen such a sharp move in the Jan-March bean spread. So I don't expect a lot today overall. My lean would be that we're going to hug 13, but beans have been known to get a little squirrely sometimes on option expiration. So big day today, we get that out of the way. We'll take a lot of open interest off of that contract, and we'll see what Jan wants to do going into first notice day, and see if we can find some more strength in those spreads. I think it's trading right around 5.5 or 6 cents today. So if it were to go inverted, I think it would send a stronger message to the market that people want to put their hands on beans today.
Sure, and it's getting thin, isn't it, boys? I mean, I looked at some volumes yesterday, and it. Guys are putting their Santa hats on. I think we're starting to put a bow on the year. Dustin, you were talking about new lows in the dollar for the move. I mean, what are you looking at there?
Yeah, so dollar index is on this rate cut assumption, is continuing to drop here. So this is a new low for the move, and we're approaching that 100 number. We're at 101, just above 101 right now. So just some underlying support for commodities as a whole. I mean, stock markets are all-time highs right now, just coming off of it at least. And whenever you get a dollar-denominated move lower, a lot of times you'll see that just be an underlying tailwind for commodities.
I could have a question just to pose to the group here for a second. We've seen commodity to equity ratio stretch really, really far. And we know that we're heading into a time of year that's rebalancing. And we typically think of that in terms of rebalancing amongst commodities, and specifically in grains, we think in terms of physical commodities. Any thoughts on maybe there'll be some rebalancing cross between equities and commodities, just with this being stretched as far as it has been?
Well, I think it's hard because your index funds, long things like corn, let's say, for example, have got pretty high carrying charges in a higher interest rate environment. So opportunity cost of holding long, given the carries, is hard for things that need to basically be stored at a cost, in my opinion. So I'm not sure how much I want to put too much stake in that. I do think things like, obviously, gold is getting a benefit, right? When you see gold, trading at all-time highs recently, testing the all-time high. But how it relates to, high cost of carry markets, I just don't know enough about if that's gonna give us a tremendous amount of underlying support. I just think that from a, what's your benchmark low? Justin had this comment a couple weeks ago, like, what is corn capable of getting down to in this cost of production environment, and in this, after printing as much money as we did post COVID, what is the benchmark base value for corn? I certainly do believe that that's higher than it was in the past. Right now, I don't think that threes are going to be likely in the near term. But where is it? Is it 450? Is it 425? It's something that we'll have to watch out for.
Has anyone seen the rebalance numbers yet, or does that usually come out at the first of the year?
I have not. I believe that they generally have given us those. It's usually after Christmas, if I can remember right. Ben, you've been hanging around a lot longer than some of us, but
there's some estimates that float around, early December, things like that. No one knows exactly where it's going to move. I think they generally get pretty close, and the basic idea is that they'll move from high performing assets to low performing assets, and just kind of spread things around a little bit. But I think Dustin makes a really great point that you're buying something that's going to come with a price ticket over time. And I think that probably becomes somewhat of a deterrent as they peruse the commodity list and decide where they want to move things around in the index fund.
And Dustin, you were bringing up cost of production. There is chatter that some inputs have started to break. Are you seeing some of these costs? I mean, are we flatlining a little bit? Or I know rents are still kind of the big trump card, but you guys have been running a lot of numbers for 24.
Yeah, there's a lot of costs that have come down substantially, right? Mainly nitrogen. There's a lot of categories that have come down. And so let's say that might, between all those categories, that might be $100 an acre cut for your average Midwestern high productivity ground.
Sure.
When you go back to like looking at the expansion of interest rates through that time frame, and those that are coming out of rate locks, right, back into a floating rate this year, we can easily get most of that money picked back up in, rent changes, interest changes. Energy prices are still not ultra cheap. So we're still seeing a lot of break evens, anecdotally in like the 5 to 550 per bushel at APH for new crop corn, for example. So I don't think when you look at just, the deduction, your like, your standard, 5-10% yield loss puts us right into fairly large losses for the average grower. So if you're writing that in as a potential 5 to 10% higher or lower from APH, it's not necessarily a slam dunk, no brainer, profitable year for the average grower that we see for 24 corn. Doesn't mean that the prices need to go higher because of it, but it is something to kind of keep in mind. Is generally we think the market provides opportunity to be profitable on any given year at some point during the calendar year. So we just want to be vigilant of that, and then have your own number. Obviously, if you have a more of a flex rent agreement where your land costs are coming down towards your base because the price is coming down, you might be in a different category than someone that went out and locked up, high flat rents for 2 years.
Yeah, that's a good point. Yeah, and I'm working right now with a couple of our industry partners to line up a discussion on some fuel and energy market stuff. I know we've had a lot of people that have reached out in the last, month and a half or so, just wanting to talk about that. And so working on lining that up, and we'll have more to probably discuss here after the first, but kind of excited about that. I'd like to hear about what their big picture outlook is as well. Brian, going into a real long weekend here, what's your weather hat on here? What do you got for me?
South America continues to get these favorable rains coming through. Argentina, like we said yesterday, looks like the garden spot so far. And Brazil looks like still for the next 5 days is holding, looking getting really nice rains coming through. I mean, it looks like it might dry out the 6 to 10, but this front's coming through, or dropping 1 to 3 inches possibly here in the next 5. So we'll continue to watch that for sure.
Yeah, it's like they're running irrigators over there. It's pretty
Yeah,
bad.
right.
Right.
The Ryland, real busy day on your desk, buddy. A lot of reports coming out this afternoon. What do you got for us?
Yeah, a ton of data is going to get thrown at us this afternoon. Markets, I think, pretty well prepared. Cattle dipped a little bit yesterday. Cash trade right now been around 170 in the live cattle and 270 in north. So it's about $3 above the previous week. It's hard to tell if that's just kind of seasonally these guys getting stuff bought before the holidays, just paying up to get whatever they need right now. But it's definitely encouraging. Typically, we do meet some kind of a low at this time of year, and demand tends to ramp up into the springtime. So, not going to really call it a seasonal bottom right before a supply report, but all eyes are going to be on the placement number just to see exactly if that's going to be a bit of a shock. Bigger placements obviously will be seen as negative. Anything over 100%. I think at this point, just considering the market's looking for around 96. So it'll kind of give us a gauge to how much we're really starting to import here on the cattle side. So that's going to really be the focus. I think after the market closes, we're likely just going to be repositioning. D's board is pretty much stuck around 170 for right now, or chop around there. Meanwhile, I think everybody's trying to outguess what the right premium Feb and April should be. It's hard to believe that we would be below these prices, but we'll see. From the supply side, that's going to be a little bit of a headwind. And steer weights right now are still sitting at a record for this time of year. They were down a pound, but producers are not that current. Looks like we've got a little bit of we've got a nice supply in front of us that's really heavy. So I think that's really the hardest part in getting at least the D's board, up and running here. So hogs, similar situation, been kind of technically traded. Been some chatter about this Mexico thing with the border, but the hog market really has. I don't think that's really part of it. So we've kind of brushed that off as far as the hogs go. Cutout's been pretty firm lately. Cash has just been kind of steady-ish, so it feels like we're just going to be limping into the holiday. I think bigger picture, we'll get the hog and pig report to kind of show us if this recent herd liquidation or sow liquidation that we saw in Missouri and some other areas is really going to have an effect on this further out supply going into Q1. So I think
What happened there?
Smithfield decided to liquidate some of their sow operations or start winding them down. So it's been talked about for months. I think they started in the summer, getting rid of these operations specifically to get the prices higher. They've been pretty transparent about that fact. So we'll see if that makes any kind of impact on the data, and that's why the breeding herd number, may be, at least the market's kind of expecting around 98. So if there's a shock there, market could go down a little bit, I'd say, from what we're expecting. But
sure, yeah, right. You look at I was looking at a Feb cattle chart earlier this morning, and with the reports coming out this afternoon, boy, that's an interesting spot coming off of that low.
It really is. I mean, we are discounted and I've been saying it for a long time. I don't know how much significance it really has, just kind of a talking point, I think, at this point. But we're just sticking right to that 25-day moving average. And I think we need some new data to really push us over that. But yeah, it's been a big break. I mean, it's been just kind of this nonstop falling knife kind of situation. And it looks like we finally started to kind of level off here. Just from where we were at last year at this time, cash cattle prices around 155 and now around 170 this year. So, I mean, obviously, that's a big jump in price just overall year over year. And, as we've been talking about, I think the risk is that we get into a supplied environment that we could find our way back down there. It's not impossible. I don't think we want to believe that it's possible, but, overall, it's just kind of, it's been that kind of market. So, I think for guys that felt like they gave away some cattle a little too cheap, they're going to be wanting those back before the report. So we've been looking at just some out of the money calls, something like that, if they really feel like you had to play for a bullish report. Otherwise, everybody in this current environment has just got to be hedged to a pretty large degree. You got to have a nice revenue floor, I think, just to combat a potential shock in supply going into Q1.
Sure. No, it's good stuff, Ryland. And we'll have we'll have a little bit more of an in-depth reaction to that, the reports this afternoon in our afternoon commentaries, but also I'm sure we'll have some comments on Tuesday morning when we reconvene here in the War Room. Gentlemen, any parting shots, your last time before we take a little break here for the holidays?
I do. I just wanted to touch on the rail situation. There's some strong industry language encouraging the government to fix the problem of the rail crossings down there. And I think it's worth noting that this is an issue for not just the U.S., but also Mexico. And I think that we're going to get that fixed. I don't know how they can. I think both countries heavily depend on, that intercountry commerce that takes place down there. So I think that we have to fix it, and they're going to have to put their best foot forward. A lot of people, a lot of industries depend on that, on traffic heading in both directions, not just U.S. exports to Mexico.
I agree, Ben. They got to get this right, man. It is a disaster, and it is just, they got to fix it anyway. Just came into the open here. March corn unchanged, 472.5. Jan beans up 1 3/4 at 12.99, and March Chicago wheat's up 3 at 615.5. Real quick here, just to reiterate the schedule going forward here for the next couple days. We have a full market today, 1:15 close. There's no trade on Sunday or Monday. And then we will have a hard reopen on Tuesday, December 26th, day after Christmas at 8:30. The War Room will be up and running on Tuesday morning at 8:15 Central Time. We are always streaming live on Facebook Live, X, and YouTube. And we wish everybody a Merry Christmas and enjoy time with your family. And we thank everybody for participating and tuning in to the show. We love doing it. And like I said, have a great Merry Christmas. Merry Christmas, Nick. And he loves the Yule log, Johnny. You put it up. That's Johnny's favorite deal right there. So
Merry Christmas.
Everybody stay safe out there, and we look forward to talking to you next week. Thanks, guys.
Merry Christmas.
Merry Christmas.
Merry Christmas.